Alright, what is happening, people? It's been a while. It's been a while since I don't post a YouTube video, and I wanted to come back with a nice projection to 10,000, okay? I believe in gold, 10,000, and I would like for you to go watch the video where I posted, I think it was in 2022 or 2023, gold to 3,000. And you'll understand a lot of where I'm coming from. And that way I don't really have to go and repeat myself, but I will show something that I was using in that video. Okay, if you're new or you haven't subscribed, like, share, whatever, subscribe, as you know, and YouTubers say that would like and would help me, but I'm not a YouTuber. I just like to trade. And so let's go to the charts. Before analyzing, this is the website that I was talking about. It's called Whalewhisdom. And here you can follow any hedge fund. This is Berkshire Hathaway. You can see BlackRock. Vanguard is here. And all of these are the biggest hedge funds in the world. And what you could do is if you just click on one of these, you'll see their holdings over here. And let me just, I don't think you can see this properly because the image is a bit chopped up. Hold on. What if I flip to this? No. All right. Well, here you can see, I'm going to move that a little bit. There you go. You can look at the holdings they have in each company, each sector, when they bought, if they sold, if they have added or closed anything, if they have added to any of these stocks and companies, if they have reduced anything. Okay, so this is the time and work you need to be putting in if you are a truly gold trader. If you really want to trade gold and you understand why it's moving and how it does, this is what you need to do. You need to follow the money and read and analyze. So this is one website, and I basically went to study the 2019 to 2022 how BlackRock was invested their money. And they've bought a lot of stock in gold mines when price was reaching 2,000. So it's logic. Like, why would you buy something at the max, at the all-time high at that time if you don't know something? So clearly they did know this was coming, and I made a video explaining how gold to 3,000 was just the beginning. As a matter of fact, I actually also showed this chart. This is the weekly chart, and I showed a cup and handle, which is just the beginning. Okay, this is the cup and handle on a weekly chart. This is your cup, this is the handle, all this consolidation, and the breakout of 2000 was the beginning. I was making this video, I think, somewhere around here when gold was just reaching 2,100, or maybe before, I forget. Just go watch the video, but I think it was a little bit after it broke 2,000. And the reason I said it was just the beginning is because if you measure the cup from the resistance, right? Because this resistance is a bit tilted. Is from this point to that. And so the bottom of the cup, which is here, you measure that, and that is the first move that gold will make when it breaks the resistance and it tests it. You see how the retest is right there on that wick? That's because this trend line, it's coming from the pattern, and there was your first move to 3,000. It was perfect measurement. What happened at 3,000 was not a reversal. You didn't see price coming down all the way back to 2,000. You just simply saw it accumulate, and now price broke to 4,000. So what does this tell you? I don't have to. As a matter of fact, I can turn my computer off right now, leave this video, and then 1 + 1 = 2. Meaning, from 2,000 to 3,000, from 3,000 to 4,000, well, from 4,000 to 5,000. That's basically what's going to happen. But I'm not just gonna say that just because the chart says so. I want to back it up. I want you to know where I'm coming from. Again, the video I made back then is important because I talk about Whale of Wisdom, and I also talk about the CFTC government website, where I can go here and see actual trading contracts being purchased by institutions. And this is the Commodity Futures Trading Commission, where you go and see data. Honestly, you just see numbers. It's boring, but it's part of what you have to do. So you go here to market data, and you go to commitment of traders. And here you can see, I was actually keeping track of this in my journal. I forget. I was keeping track of how the contracts were being positioned. This isn't it. And I was making a little graph, like a chart line, to visualize if the volume or the buying or selling of options, put or call options, how were they looking? What was that looking like? I don't know where it is. I don't know. I can't seem to find it. Maybe it was in another book. And I was basically doing the homework, I stopped doing it because at this point I already know that my theories and what I've been also researching and reading and listening to is going to happen, right? It's happening. So I stopped, I really just stopped keeping track of that. But I was going in this website and I was looking at, this is, as you can see, metals and others here in reports, September 23rd, right? You can see monthly how the futures and options are being traded. So I would go to metals and others. I would click here, long format. This is a boring site, but if you scroll down, you can see basically, I was looking here, commodity gold futures and options. So as you can see, you can read managed money, other reportables, swap dealers, producers, and merchants, and look at the difference. They're still overwhelming high on long positions versus shorts. And everywhere, other reportables. This is like just regular money, and these are non-reportable positions, 68,000 versus 36,000. Other reportables, 127,000 long versus 26,000 short. Managed money, this is usually the hedge funds or banks and brokers. They have 192,000 versus 33,000 short. Swap dealers, because they need to go against and offer the contracts and liquidity to manage money and private investors, they're going to be shorting also. And the producers are also going to be shorting, protecting the value of their asset. In other words, I have physical gold, right? I know my physical gold is gaining value over time. However, I don't know if eventually there's probably going to be a drop of price. So in order to hedge and protect the value of my physical gold, what I do is I simply call a dealer and say, hey, or a bank or something, hey, I want to put a few put options. I want to purchase put options, or I want to protect my asset on the shorts, toward the short side, in case price comes tumbling down. And so my physical gold doesn't lose as much value. So how about I buy some short positions, and I'm just hedging the value of my gold. I don't care if I lose on the short, because eventually my gold is going to be more valuable. So when I sell it on the market, I'm still getting that money back, which is a normal thing and logical thing to do. Also, whoever is dealing these contracts that has a lot of gold and has a lot of contracts for gold, when you see they're shorting or have short positions or contracts, doesn't mean they're selling, trying to, or thinking that the price is going to come down. They simply just have to sell to a bank what the bank is buying. For every seller, there's a buyer. So when you read these numbers, understand why the producer and merchant is going to be short versus long, and the swap dealers. Whereas managed money and other reportables, which is just private money and everyone who's trading, is going to be long, okay? So I was looking at these numbers plus following the money and looking at each, not each, but mostly BlackRock, Berkshire, and Vanguard. I was looking at how they were purchasing gold in terms of were they selling stock of a gold mine, or were they buying it? And they were buying it. So, and they continue to buy it because price reflects it, okay? So these are the two websites mainly that I was using for the video I made. And if you want to see how I searched and clicked on each of the things, go and look that video. But basically here we are, and this is the chart weekly. Price as broke 2000, it retested that trend line and it just popped. Okay, so here we are, 3000. Okay, and 3000, look at what happened. Something very interesting, which was as price broke above it, it reached 3001 something, and it made a quick pullback just below 3000 to retest 2957, and it never came back, and it's gone. So we see 4000. Let's go to the daily, for example. Look at 4000. Okay, I'm going to delete all of this for now because I don't know what that was. Maybe some analysis I had. This is 4000 right there. And look what happened. Gold broke to 4,000 to 450, made a pullback below it, and came back on top. Okay, and what was respected was this daily wick. Okay, I know I'm a bit far away. Hold on. There we go. So this is 4,000, and this wick was respected right there. This low was protected, and that is 3,940. This low was 3,944, and this one 3,947. So if you round it up, 3,950. Okay, does that ring a bell? So here we are, below 3,000. The price that was respected. Where am I? Oh, hold on. Over here. Below 3,000. Right here. 2,956. I don't think that's a coincidence. I think that's actually very algorithmic and very interesting. So as we're breaking these psychological barriers, 3,400, 3,500, 3,600, and so on. Look at over here, for example, 3,500. It didn't touch again, but it respected 3,510, basically 3,511. This is very similar to when the price of gold broke 2,000. This was 2,000. Okay, here we are, 2,000. We broke it right there, and breaking 2,000, we only respected initially 220s, but after this at 2,100 we respected 2,147, and you round it up, you can round it up to 2,150. Okay, so those are the quarterly prices, they call them, right? So here we are, 4,000. What's going to happen at 4,000? If you ask me honestly, I think it is not going to stop. It's going to keep going higher and higher because we have new things coming in. Or actually, I shouldn't say new things. We have the things that made gold break for 2,000 coming out to the public, or starting to be more evident. Okay, and that is the fundamentals that we need to understand in order to be trading gold. We can't trade gold as if it's a stock or a forex pair or some other asset that we go and see the RSI. Oh, it's overbought. And I actually started the last video where I was just making fun of the bears, saying, have you seen the MACD and the RSI? It's overbought, bro. Gold is gonna melt. This has to make a retest, and I keep seeing a bunch of analysis on Telegram groups, on Instagram, people projecting a drop to 3,000 or 3,200. Where are you getting the information that backs that up, or that proves that there's probably going to be a sell-off that far down? Are you going into the CFTC government website and looking at the contracts? Are you seeing that a bank is selling more than they're buying? Are you seeing that banks are actually shorting or getting rid of gold? Are you going, and you know, I get a little aggravated, man, I lose patience, because even though we win the money from those people that are hard-headed and arrogant, thinking, what do you know, gold, man, it has to correct, I get your money, bro. But here's the thing, do your homework, man. Like, actually. And another thing is, I trade gold. Some of you guys don't. Some of you people saying that gold is gonna melt, like, you don't truly trade gold, and then here you are coming up with this weird idea, and you're hurting people. You're making people lose money, because if you actually have a following on Instagram or YouTube or whatever, and you're telling people to short gold, man, be careful. You're making people lose money. So again, you have to study the fundamentals, which is macroeconomic data, geopolitical conflict, inflation, which is within macroeconomic data, unemployment, and smart money. Not smart money concepts. I mean, actually, the private money, BlackRock, Vanguard. Look at the numbers, okay? So do this. Take the time to do this and understand why gold is not going to come down again. So I was going to start writing here. We have number one. We have the US dollar losing faith. People are losing faith in the dollar because it's just crazy. The debt, they're printing money more than they should. They're buying more than they're selling. So there's a deficit. The United States has a deficit. That means they are buying more than they're selling. So they're not producing more than they can pay for, that they're consuming. So number two, here you have inflation, because of they're printing money. The world there's too many dollars. So as there's more of something, it's less valuable. And then tariffs, for example, that's one thing it could be good for the country in a short term, because you're charging people up front, like, hey, you want to make business in my country? Pay up front to make business. Okay, thank you. We got money. Well, it's not that simple, and it's not that pretty, because you're actually hurting your own people that now, for the increment in price to make business that another country had to pay, they are going to have to recover that money somehow. They have to make up for that expense. And if they can't lower their costs, where do you think they're going to get the money from? The consumer, from the product they have to sell at a higher price, because their costs of making business have risen. So what do? Well, hey, you're going to charge me more to sell my product in your country. Well, then your country is going to have to pay more for that, because I'm not going to pay, I'm not going to not win more, right? I'm not just going to sit with arms crossed and then pay more to make business, and that's it. Like, okay, I'm going to pay more, but where's that money going to come back to me? So that's the whole discussion and the whole dilemma with tariffs. And you don't have to hear me out, or you don't have to go into the news. All you have to do, if you live in the US, is go to the street, go to a grocery store, go put gas in your car, go buy a shirt, go and compare prices. And everybody knows this is not new. Prices have been rising forever. So that triggers a demand in gold, because gold is a precious metal, is valuable over anything else, because you can actually make something with it. It serves well for jewelry. It serves excellent for semiconductor chips, for cars, for technology. You can do things with gold. What can you do with a piece of paper with some guy's face on it and a number 2, 3, 100, whatever? What does that piece of paper, fiat currency, get you if it's not value, if it's not worth what people say it is? Like today, you could probably go buy food. Okay, fine. but are you having to pay more of that paper for the same food? Because if so, then that paper's got a problem. The food is the same, but you need more paper to get the food. So that piece of paper is got a problem, and that's the thing. So because it's an idea, it's an illusion, right? Hey, this piece of paper right here is worth $100. Why? Well, because I say so. Okay, fine. Let me get it. Hey, Bobby, this is worth $100. What can you give me for $100? I don't know. I'll give you my service and or my product. Oh, thank you. At some point, people are gonna be like, man, is this really worth for $100? I don't think so. And so, little by little, the US dollar is losing faith. There's inflation, and gold comes in because it protects the assets from people that are betting that piece of paper, which is not worth much, on other people's paper. And then I don't want to get into that, but it's basically, you get the point, right? Then you have geopolitical conflict, which, by the way, is not getting any better, even though there is this ceasefire thing, thank God, obviously, and hopefully it lasts and it actually does terminate the war in Gaza. But this is just another show, another, fake, I think, unfortunately, another just, smoke curtain to hide something else or whatever. Like, yeah, sure, we gave them some food, blah, 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 but things are going to keep going. There's a much deeper and evil agenda going on in the world, and Gaza is not the only war. You got way more, and not all of them are being actually truly projected on the media for you to really know how and what is happening. So geopolitical conflict is not getting any better, and that keeps adding to the demand of gold. Now, the last thing I want to point out to here is what I think is a US scam. I think this was a big scam with the gold. So you all know 19 something, I think it was 1970s, the US was still using the dollar tied to gold. There was a gold standard. And so basically they had all this gold and they sold the gold to someone else. You could buy it, but because it was heavy as fuck, you couldn't carry it with you if you bought a lot of it, obviously. So what you would get is you'd get these notes, right? So you get the note that represented the amount of gold you had. And at any time you wanted, you could go to the bank or to wherever you had that gold stored in and say, hey, I don't want this note anymore. I actually want my gold. So here's the note. Here's a piece of paper. Give me the physical gold because I want to maybe do something with it. And I don't know, somebody else is asking for if I can make a little cool earring and they're going to pay me more. So I want my gold. And that's what could happen. Well, some guy decided to say, okay, we're not going to do this again anymore. We're, gold standard to the trash. And now the dollar is not backed by gold. It's just whatever I say it's worth and whatever we print and whatever we say it is. And this has to do with the fact that they were basically turning the dollar into a petrodollar. Petrodollar. And that basically means they forced, literally, the US forced other nations to buy oil with the dollar only. And if they didn't, they would completely bring down the government that country had, or the system they had. They would start wars and conflict. They would fund groups to go and take down the leaders who weren't pro petrodollar, because that was the Ponzi scheme that the US developed around the dollar and other nations. And so what I think happened as part of everything is that physical gold that the US was holding, right? And they were keeping safe, keeping safe for other nations, right? So they had the gold. A central bank bought, I don't know, $500 million worth of gold. So they gave him that paper. So now that country is that country is out there doing business with that paper because they said, okay, we have this gold. This is worth 500 million. So now, hey, everybody, here we go. With this money we have, with these euros, with these pesos, with these pounds, the yen, all the fiat out there, our money is backed up by this gold. Where is the gold? Oh, don't worry, the USA has it. Oh, the USA is the strongest nation in the world. Okay, we're safe with the USA. So my physical gold, which I don't actually possess, is sitting somewhere. It was called Fort Knox. It's a military base in the US, and a lot of the gold apparently is there. And so, right, so here you are, you're a country, you're a nation, you bought all this gold, you have a paper, and you're keeping that paper safe, right? It's probably under the president's chair because it has to be very safe because it represents the gold you have. So you're doing business with that idea that you have all this gold, that at some point, if you wish, you could get it, right? Because it's the value that you're running your system on and your economy, or at least a big piece of it. So a lot of nations are doing their business with this representation of gold. But then I think something happened. I think the US said, holy crap, we still got all this gold here. Why don't we just resell it? I don't know, maybe in the black market? Now, before I actually start speaking my mind out, this is the only thing that is coming from my head. Everything else I've said is backed by numbers and data. You can go and do your research. You can see prices are higher. You can see the banks buying more gold. You can go to ABC, New York Times, all these controlled media enterprises and see what they're saying. These things are actually happening. Where I'm coming in, sort of like connecting the dots a little bit here, and I'm asking, what's the rush? Like, why the urgency? Like, if gold is actually gonna go to 5, 6, or whatever thousand, why doesn't it do it in a sort of like steady, healthy, right, quote unquote healthy way, meaning a trend that is not so parabolic, that could have a strong correction? Why the rush? So I think to myself, like, holy crap. Do you think they actually resold gold and made yet more money on top of it? So now I have this gold and I sold it to country 1, and then here is the gold. So I go to country 2 and I'm like, hey, psst, I have some more gold for you. How much do you want? And so I resell this gold and, hey, psst, Bob, how much you want? I'm just doing this over and over, and I'm telling everybody, hey, your gold is safe. I got it. Don't worry. But you don't know I sold you the same gold I sold him, right? And all I do is I just keep reselling it. So I'm thinking to myself, what if that is also adding to everything else? And that is why this rush. Because when the countries, now we're coming into the present, everything that's happening, the loss of faith in the dollar, the inflation. I forgot to say unemployment, right? Employment. So this is inflation plus employment, because obviously you want a country to have its people with jobs. If you don't have a job, it's scary. So, all right, you got all this situation. You have central banks realizing this, and then the debt, the US dollar not only is losing faith, but they have debt. So debt, inflation, and unemployment and employment. So the US has all this debt. Where are these guys going to pay it? When and how? They've been just adding, and then this big beautiful bill comes in and it's more debt. Bro, at how long are you going to go with this show? At what point are you actually going to be able to pay us or pay the debt your people has with your government and your government with others? How does that, like, that doesn't add up? And so they start requesting the gold. Who is they? Well, the nations that purchased the gold from the US back in the day, and that the US and maybe England, who's been storing a lot of physical gold, they're having to ship gold back to them, and vice versa. The US is obviously also purchasing gold that they maybe thought they had too, right? I'm not directly pointing the finger at a US only scam, but I think it's mostly US because it's the US that has most of the problem. But here, England can't stay out of the picture, and other countries that are big in gold. So I'm thinking, okay, who's got the gold? who truly has it? And if you can remember when Trump got reelected, one of the first things he said was, "He who has the gold makes all the rules." Something like that. I think it was, and and then he poked a little the balloon on Fort Knox, which is where the gold is, and he was making this weird suggestion that maybe is the gold there or not. And I actually thought to myself, like, what does that have to do with anything? Why ask? Is there what could have happened? Who did they steal the gold? It's not that the gold got stolen. Is that it was resold, or maybe, right? Because that's a theory. So I'm like, interesting. So if all right, so if that were true, right? I'm putting myself in the spot of a central bank or the U.S. government and or any other government that has gold and resold it. Yeah, let's imagine that. That explains in my head. That explains why I would feel very urgent to buy back any physical gold that doesn't belong to the street person that I sold it to, because it's actually belonged to the central bank of, I don't know, Somalia, or I'm making countries up, Russia, China, whoever bought it from me in the first place. So I have to go to the person I resold it to and say, hey, I'm gonna need that back. And obviously they're saying, like, well, pay me, right? All right, here, give me all of it. And so they're literally they don't care about the price because they need it. They need to pay it. They need to return it. It doesn't belong to the person who they resold it to, or the entity, or the other government, or whatever. So you have this rush, not just because gold is going to go to 5,000. Oh, we'll just keep buying. No, it's because, holy crap, I've got Japan here calling me up and saying, where's our gold? I need my gold back. And here's the money, so get me the gold. Okay, yeah, sure. Hang up, get in the car, go, even if you have to like blackmail a whole gold jeweler or whatever, and tell him or her, like, give me all your gold now. How much you want for it? Okay, boom. So that's demand. It's increasing like crazy. On top of everything I've said, maybe that has something to do with all of this. And that clearly does not, or I should say, that clearly adds, right? It adds to the fuel, or to the bull run, or to the strength of the demand. And so therefore the price increases. Okay. I hope I got all my points across and you were able to interpret them correctly as I was trying to express myself. And I had to do this so that the chart would make sense to you, to why and how I'm going to project the move to 10,000. Okay? And based and with all of the fundamentals I just mentioned, now we can understand why gold hasn't really had a major correction. Okay? And historically, since gold broke 2000, the biggest corrections that I can see here are these two. This is when Donald Trump got elected in 2000. Sorry, what was this? Yes, 2024. Okay. And then you had this one, and this over here. This drop and this drop. those were the biggest corrections. Literally, if you go to the chart, those are the biggest corrections. And I don't think there's going to be another one of these until in a very long time. And there are a few ways I interpret this and I project this. Number one is obviously history, like going back in time and actually seeing how gold moves. And when gold breaks, let's go to the weekly time frame now. When gold breaks important levels, and I'm just going to start from 2000 because before 2000, the price of gold was very manipulated and it was purposely being forced below 2000. Okay, because the US has to sell the idea that everything is okay. And if gold is cheap, everything is okay. Because that would mean that people are not afraid of the system they have. And so gold, they don't want it. It's like, I know my gold is there. I know it's worth 2,000 something. I'm okay. But the minute gold starts spiking, it's sounding big alarms in the financial system. So when gold breaks 2,000, people here are like, oh shit. And it just started. Okay, this just started, seriously. So from 2000, look at the way gold goes up on the weekly time frame. As it makes big runs, it only stops to consolidate. Big run, it stops after a correction to consolidate. Big run, makes a little correction. Big run, this was a nice pullback, one of the ones that I mentioned. Okay, but it's still just a corrective, accumulative correction phase. I called it like that. It's accumulation or correction, but it's not a reversal. It's not a big pullback. It's just an accumulative correction phase. In other words, the market does have a correction, but it doesn't break the overall trend and the bullish structure. So obviously you may ask, is it normal for gold to go up 8 weeks in a row? Well, look at this over here. 1, 2, 3, 4, 5, 6, 7, 8. It went up 8 weeks in the past before. Over here, 1, 2, 3, 1 bearish, 1, 2, 3, 4, 5. So 8 weeks with 1 bearish. That is how gold goes up. That is how gold breaks with strength on its trend. So it wouldn't surprise me if we have more bullish weeks, and if there ever will be, and obviously it might and it should eventually be a bearish week, I do not picture it to be like this. For example, right? I don't see a bearish week like this. What's everybody imagining, right? I don't even see it like this, breaking or closing below a previous weekly low. If it ever does come below a weekly low, I actually see it come back above and close at or a little bit over that weekly low and then just leave a wick. Okay, that's how I see gold correcting eventually. And then the next week would be bullish again. If there ever is, like I'm saying, a bearish week, for example, like this week or these weeks. You see, I don't think we're going to have 2 weeks in a row, but again, maybe one would be okay. But look what happens after that bearish week. Boom, more pop to the upside. What happened here? What happened here was completely normal. Here's another website for you, Seasonality. Go to the Seasonality, insiderweek.com, Seasonality Tool. You click metals, you go to gold, you hit calculate, and you see the average price increment from a 15, 10, and a 5-year average line. And you see that from May to July, it's a natural and normal sideways move. But starting on July, August, September, October, you have bull runs in price increments. Then you have November sort of sideways with December here and there going a little higher. And then you go again, January, February, March, April, very bullish on gold with a few corrections on February. and beginning of April. So if we go to the chart, it makes complete sense. Look at the date, April 25. If we go to the seasonality, look at over here, April, March, April 26, 16, 17, 21. On the 21, it starts bearish correction. So here, price went up April 14, April 21. It started its correction. So it made complete sense. And what happened? Was there a crash? No, there wasn't. There were higher lows. And a big resistance at 400, 500. This was a load. This was loading this slingshot we're looking at. Okay? So how do you measure this in your chart? What can you do? Just looking at the weekly, this push from 2000 all the way to 3,500 is going to be the distance that gold is going to move next. You can take a few measurements. Obviously, this is the low to this high that created the ascending triangle, and gold already moved that distance from the resistance right there. It made it perfect, 4,050. But this isn't the actual leg up of this ascending triangle or a bullish flag. I'm using the resistance and I'm saying we got an ascending triangle, but this is a bullish flag, a symmetrical triangle. Either way you look at it, the technical rule with these patterns is whatever the push up after the correction, that is the distance that price is going to move on the breakout, from the breakout and beyond. So what is this push up? What is that the stick of the flag? What is it? Is it from this low, from this low, from this low? In my experience, and you can go in my trading view analysis, you can go in my Discord and see the analysis I've made and the projections. In my experience, a stick or an impulse is that without any significant pullback. And I don't see a significant pullback here up until the actual pattern. This is a correction, but it is not a significant pullback in relation to this low or this low. So what I think is that this is the push of this flag right here, because here the market just made little correction faces. Look at this, for example, is the same thing. This push up, this little correction has this. Notice how when price gets to that, has a correction. You see? So I think, again, this is the true stick. Like, this is the true measurement, okay? From 2,000 to 3,500, we have then this correction, this major correction that took months. Again, it took months to accumulate. So now what do we got? We're going to see initially this movement, and that takes us to 5,000. 4,891 to be exact. But I think it's going to basically reach 4,900, and 5,000 is right there. So this is that next move. The same way that you measured this cup and handle from the support to the resistance line, which is right around here somewhere, basically, and you see that we got right to where it is right here, 3,000. Okay, so and this is how also the numbers make sense. The price, right? It's key price levels, psychological levels, from 2,000 to 3,500, from 3,500 to 5,000. Okay, so how can we get there? How are we going to get to 5,000 and beyond? The same way we got from 2,000 to 3,000 to 5,000. So we could actually just do this from or with two perspectives. Or one would be, let's go back in time and try to basically copy paste some like a little like the moves, or basically is, well, how does our intuition say? Because I think intuition is a underrated strength we have. You know, you obviously want to know what you're doing and why you're doing it, but a lot of the times it's just that feeling we get, and a lot of the times we end up being right about that. So I'm going to use both history and my own intuition to project the move to 5,000 and beyond. And using history, all I'm going to do is draw here what I'm seeing from 2,000 to 3,500. Okay? So I'm going to draw here how gold broke 2,000 and got to 3,500. Why am I going to do that? Because 4,000 is the next psychological barrier after 3,000. Okay, so right here we went up to here, we had a little correction, up, down, down, we went up again, we had a little correction here, and we went back up to here, we had this correction, and then we had this pop, then we had this correction here, we had this pop, and here we had this accumulative phase, which is that nice ascending triangle. And then here we are, 4,000. Okay, so this is the move that gold made from 2,000 to today's present price, 4,000. If we put this up here, just by placing it from 4,000, this is more or less the future price. And obviously the numbers add. Look at that, 6,000. That's crazy, right? It's interesting. Well, it's math. From 2,000 to 3,500, obviously from 4,000, it's going to get to 6,000. So that's interesting. That's very interesting. If we put it just like that on 4,000, 4,000 is this line on the top. But I'm going to put it from 3,940, which is that low it made. Okay, we get to 6,000. And if we see, I'm going to do something else. I'm going to throw a trend line. This is the daily trend line, a daily trend line. This is not as tilted to the upside. I'm going to put it back like this so you can see it. Okay, there it is. I think you can see it, right? Yeah. The one that price is respecting, I'm going to take this out now because it's kind of making some noise. And I'm also going to take these lines out. Take this out. Okay. Right. So the trend line that's actually holding price is this one here. This one right here. And if I extend it, look at that. That's very interesting. You see that? You see, just by copying and placing the past move, it respects the trend line, which is, I think, very interesting. Now, obviously, you could have this trend line to hold eventually in the future, but I don't think so. Again, I think we're just gonna go quite vertical to 6,000 to 5,000, and then at 5,000 we're gonna just consolidate. Okay, fine. So let's go to the daily. How would that look like? So based on the past, the next correction is going to happen at 4,300. And I'm going to show you this, because if you go back in time, one of my ideas was 4,300 based on the weekly chart. Based on the weekly chart, I had measured from this low, after this correction, this low has not corrected big time. So from this low to this high, from the resistance of 3,500, you get to 4,300. And that's what I was showing over here in my trading view analysis, and also, where is that weekly? Did I not project this? The long shot, I think this is it right here. Oh, that's one of them. But no, there's one. Where is that? Okay, I'll look for it in my Discord. I'll show you. Here's my Discord. I think this was here on setups. And in setups, I sent... Where is this? This was a while ago, because I kept telling people, don't forget, here it is. Friendly reminder, daily time frame. Okay, I was grabbing the daily time frame. From that low to 3,400, the breakout will reach 4,300. That's what I was sending. I sent this a while ago. Forwarded from the 7th, August 24. Okay? And I was basically pointing to 4,300. And now that I'm actually looking at this is wild. This makes all the sense in the world. If we go up more or less this way, it's so far it's making sense. We're going to have a continuation, and 4,300 ish, we're going to have a correction, a cumulative corrective phase, which would represent this one. Okay, that's the corrective phase that we're going to look for over here. And from that, we're going to have another one over here, which represents this one. And that is at 4,700. Look at what happened at 3,700. I'm going now to the 4-hour time frame. Look at the key levels. For 3,700 over here, correction, breakout, retest of 3,710, 715, 720, continuation. So these are the prices where we could see. Look at 4,700. What respects? 4,500. Look at this. This is insane. I'm not making it up. I just basically copied move by move the way gold broke 2,000, and it's making sense. The lows and the highs and price. Okay? Next low, 4,200. What was the low that gold respected when it broke 3,000? Look at this. Gold broke 3,000 right here for the first time. Right there. Boom. Look at that low. 3,000. Obviously, it went digging deep, but after, here it is. That's the low I wanted to find. 3,120. And then 3,250. And then 3,300. 3,310. You see that? So again, here we are, 4,000. 4,000, dip below 4,000, closing above 4,000. We're going to have a pop, very high up to 4,100. And at 4,100, we're just probably going to see this resistance hold, which is 4,050. And then we're just going to shoot straight up to 4,300, and at 4,300 we're gonna hold 4,200. Obviously I'm talking with the certainty that price copies exactly the same moves, ups and downs it made from 2000 to today's present. Okay, and of course this could go completely wrong, but what I find fascinating is that price would actually make sense, because we get to these critical quarterly prices that historically gold has respected before, and so it makes sense to me. Obviously, also with the fact that this trend line would respect in the future is actually very interesting also. Okay, so this is basically using the past without any intuition. My intuition would obviously say, hey, what would happen when the government, oh, by the way, I forgot to write as one of these things that are adding fuel to gold, I would say here as a 5 is the US government shutdown. So what would happen when the government comes and says, okay, we're open again, we made a deal with each other, we're happy, politicians here making, agreeing for the first time in something. What would happen to the price of gold? Would it tank? Would it collapse? I don't think so, but it's the first time that I'm living during my trading career a government shutdown. So I can't tell you, because I just don't know, and it would be very unprofessional of me to say, if the government opens again, that's going to lead investors to feel better about their world and their country, so sell gold. That would probably be the worst advice I could possibly give you. I think my intuition says that's going to be nothing. Nothing's going to happen. Gold is just going to probably, okay, maybe a little dip in the New York session to grab liquidity somewhere, but hold overall structure. And again, I'm going to warn you on my Instagram that I bought the dip. We move on. So, going into the 4-hour time frame, there are ways to project price. For example, we have this push that has this correction, A, B, C. If you are an Elliot wave count trader, you understand this is a corrective phase of A, B, C, and then we have the birth of a new up wave. And I can simply measure. I can measure this move up after the correction from the breakout and from the low. Where does that get me? First level is 4,152. Second level is 4,267. Let's round it up and say 4,150 and 4,260. Does it make sense? Yes, it does. Absolutely. What else can we use? Fibonacci. From this low to the high, the market corrected to the 50%. It respected just a little below 50%. We see the 27 extension is 4,112, rounded up to 4,100. Then 4,184 and 4,262, 100% of the expansion. So those are a few tricks you can use to project the future price. I'm just gonna go simple, less is more. Push up, correction, continuation, push. And I'm gonna measure that from this low over here, from 4,000. When price opens in a few hours tonight, it's Sunday, October 12th. When price opens, I think it's gonna open with a gap, probably somewhere around here. And then price will probably come fast into 4,000, dip below a little bit 4,000, and then bam. Okay, and so then you can expect price to be at around 4,100 and something, and then the retest of this previous high is gonna be nice and steady, and then we're gonna see a big continuation push, taking price really well into 4,200. I think the following week. Next week, probably 4,300, and then we're gonna have a slight correction. I think obviously price might not go straight up as though it's been going up, but We're gonna have some sort of sideways move, just like these days, you see. Eventually, you have over here, look at Thursday, Friday, Monday, Tuesday, Wednesday. Correction, little slowdown for 2 days. Over here, Thursday, Friday, Sunday, Monday, Tuesday, Wednesday, correction. Thursday, Friday, breakout, Monday up, correction on Tuesday. Here we are. Thursday, Friday, Monday, Wednesday, Tuesday, Wednesday, correction. Boom, we started again. Friday. So we're going to have Monday, Tuesday, probably Wednesday, correction, a little into Thursday, and then boom, right? So more or less, that's what you just follow price based on each day. Okay, here we are, 1 hour into today's video. If you're still here, like, subscribe, blah blah blah. To finish this very complete, hopefully, and helpful, advanced but not advanced tutorial or not tutorial or whatever about trading gold and its future price, let's talk about 10,000. How can it get to 10,000? Well, with all that's going on, I think what's happening is gold is being repriced, and at some point there might be an attempt to go back to the gold standard somehow, whether that is with the fiat currency as we know it or crypto, a digital dollar, a digital euro, a digital whatever, backed by gold. Oh no. Yeah, well, if that's the case, what would have to happen is for every existing dollar, euro, yen, pound, whatever, for all the currency that we know to switch to a digital currency, which is the same thing, it's just digital. If you need to back it up by gold, guess what? Gold has to be worth a lot more. Let's just think in dollars terms, because the dollar was backed by gold. So if only the U.S. wants to say, because Donald Trump said, he who owns the gold makes all the rules. Whoever has all the gold, or most of it, will make the rules. So if the U.S. has most of it and says, okay guys, now, you know what? Now Bitcoin is going to be backed by gold, or XRP is going to be backed by gold, or USD whatever, or this digital dollar is going to be backed by gold. Well, guess what? That digital dollar would have to be worth something, right? And what is going to be worth is, well, it's obviously worth whatever dollars you have existing, the paper. So let's say you have 10, right? To make it very easy and simple, you have 10 in total of paper. But the gold that you're backing that 10 up with is only worth 2. So the minute you say to the world and your people, okay guys, this paper is not going to be a paper anymore, it's going to be in this screen. So this number 10 you see on your screen is backed by gold. It's the same. I can make business and I can pay back my debt because this 10 is the same as this gold. There's an error there. There's a mistake. Gold is worth 2. In order for your 10 to be backed, meaning even with the gold you're trying to back it up with, that gold has to also be worth 10. And or your dollars has to be worth nothing. Which is why the dollar is tanking and gold is going up. Which is why the US government is buying Bitcoin and then they're going to dump it, because they have to erase as much as debt as they can and back it up with a much more expensive gold to save the day. I think I said too much there, but that's what I sincerely and genuinely think and believe, with my as smart as possible educated guess. You have the dollar tanking because you need to tell the world is not worth as much as it was before, and you have the gold skyrocketing because it needs to back your dollars up. And the minute there's sort of an attempt, because if they manage to pull it off, gold would have to surpass 10,000 by far. If they manage to pull it off, instead of having $37 trillion of debt, they're probably going to have, I don't know, 18 or, I don't know, probably 20, maybe less. I don't really know, but that's the goal. That's a goal, one objective. And so gold, as it gets to these 4,500, 5,000, 5,100, it's just going to keep doing what it's doing. It's going to respect psychological price levels and reach higher and higher and higher. At some point, there's probably going to be a decrease in the price of it, but I just don't see it, because think about it. If I have a hard time seriously coming up with an idea or an event that would justify gold coming down again. I'm gonna just stick to my theory and tell you I don't know how gold could come down unless there's like some technical flash crash where some robot makes a mistake and sells more than it should, and then it triggers some sort of like, collapse. But that's that's like extraordinary. So using the move of the past from 2000 to present moment, the move makes quite a lot of sense, and it doesn't surprise me that the longer correction also sort of is at 5,000 and on January 2027, right? Because there's a projection that by 2026 December gold could be at 5,000. So it makes sense. December, November 2026, 5,000. Then come January, the year starts, and boom, we continue moving into July 27, 6,000. And that is just 6,000 with 3 more years to go, and I'm projecting it to 10,000. So there's 2029. If I just keep doing more or less the same distance, it doesn't have to be the same, but it's the same increment in price. And we go here and we can see that by January 30, we are at 9,000. February, March, 9,000. January, December 30, 10,000. December 2030, 10,000. With just by projecting the distance that gold moved and more or less the degree with which it moved, the speed and the strength with which it moved, because this could change, people. This could actually speed up as more things happen, and as the world keeps seeing the truth coming out. Trump being in the Epstein files, Trump probably being, kicked out somehow from the White House, or any civil war at any country getting, losing control, any terrorist attack, any world war getting a bit heated up. Anything could just have a spike in gold in a week or in a day that would speed things up. So I'm almost being a little bit not so optimistic on how gold could eventually reach 10,000. Okay, but if things just go as they are going, we could see an increment in price from like every year. This was March 2024. Right here, March 24 to where are we? To October 25. So it's a year and a half. So let's say 2 years. Where is, yeah, 2 years, it's gonna be a lot. So it's almost 2000 every, it's almost 2000 every year. It's basically 1500. Yeah, because this is March and March. So it's 1000. 1000 a year is what gold has been moving so far. But look at today. Only from March to October, we already moved 1500. So it's getting exponential. But you see that? So 1000 a year, now 1500 in less than a year. That's insane. It's probably going to be 2000 a year. So if it's going to be 2000 a year, that means that from November to November of next year is going to be at 6500. This is where I'm using intuition now. And from 6500, we could be reaching, so that's November, August, November. Here it is, November. 6500 right here. November. To November, if it does another 1005, if it does 6565, we got 500, 1000, 2000. So that would be November 29. And so I think we could get to 11,000 by November 2030. So projection 1, based on history, is 10,000 by December 2030. And then projection 2. This is mixed plus intuition. Would be 11,000 by November 2030. Because of a potential exponential increment in price due to its rising demand and potentially more heat, more chaos. Keep in mind, we haven't witnessed, which is yet to come, the financial collapse. The private equity financial banks collapse. Another 2008, 2007, and world recession, potentially. We haven't seen that, and I think that's going to happen 2026, 2027, and into 2030. So, yeah. Okay, guys. I hope you enjoyed this video. I honestly tried my best to explain myself and show you everything where I'm getting everything from. Of course, I didn't go into detail with these websites, but go back and see the video I'm going to put up there. And best of luck. Buy the dip, hold, secure profits along the way, obviously, but you can be sure gold shouldn't reverse in a long time. Okay? Take care, and I wish you all the best. Abundance, success, health, love, happiness, and yeah, peace.